And breaking news coming in, the rupee continues its free fall. The free fall continues and the rupee slides 14 paise to a fresh record low. The rupee stands at 71 rupees 35 paise against dollar in early trade. The local currency opened the day at 71 rupees 24 paise against the previous close of 71 rupees 21 paise. Poonam joining us live to get us more inputs here on how the rupee continues its free fall. Poonam, over to you.
Well, thanks so much for that. In fact, yes, the free fall, I wouldn't really say this is a free fall, but yes, this is a fresh record low coming in on the rupee. And also look at the bond yields in today's trade. We're seeing the bond yields crossing over 8%. That means that bond yields are at a near 3-month high. If it does cross a little more bips, I get bond yields would be the highest in the next 3.5 years. We will still have to wait for that. Having said that, what's happening is because of the rupee fall, markets are anticipating that there is a possibility that RBI may hike rates much sooner than expected. We've also seen a good amount of Q1 GDP that has been positive. And if you look at the inflation risk, that's definitely rising. Look at where the crude is. Crude has hit $78 per barrel. That remains the biggest joker in the pack for the Indian economic macros, and hence bond markets are anticipating that maybe RBI would hike rates sooner than expected. And if that is the case, well, we've already seen the MCLR hikes coming in from the banks. That does mean that higher interest rates for the common man, be it the retail loans, be it your home loans, etc., all those things would get costlier. But it's RBI's job to maintain that intrinsic value of the rupee, and hence that shield may probably come in. Probably we would have to wait and watch out for that. The second important thing is, if you look at the dollar index, the dollar strength remains fairly there. That is also leading to some amount of pressure on the rupee. We're also seeing that EM currencies have come under pressure, and hence all eyes would be there, even in terms of the trade wars as well as the strength in the dollar. These factors would need to be watched out for. As a result, would the government and would the regulators, both government and RBI, allow the rupee to find its own value? We will have to wait and watch out for that. But the two defenses may be interest rate hike, or maybe even NRI bonds as suggested by Bank of America Merrill Lynch. Those things need to be watched out for. Besides that, of course, the stock market is likely to be volatile, and hence from a common man perspective, it would be higher interest rates as well as volatile stock markets. I guess we need to be bracing for these two events as a common man. But as of now, yes, the rupee does continue with a depreciating bias. Some of the economists do believe that rupee may still be hovering around 70 to 72 to the US dollar by FY19.
All right, Poonam Sani, many thanks for joining us this morning and putting that in perspective for us.